Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting and moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong monthly historical support and demand area. From here, in fact, all these previous rejections to the upside have been created. Now, these are very important rejections to the upside from a monthly standpoint. So since the market at the moment is testing the exact same level, which is clearly a strong historical support and demand, there is definitely the possibility of seeing more bullish price action being developed away from this area, as already happened in the past, every time that the market tested this area and created massive rejections to the upside. So there is definitely the possibility for another rejections to the upside away from such level. We can also notice that if we look a bit closer into the most recent price action, we can notice how this area is also creating an important pattern. We have a strong impulse followed by a correction. After an impulse, if you want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And what we can notice is that we have the 0.618 and 0.786 Fibonacci retracements, which are lining up perfectly with this previous area of support and demand. So actually we have confluence of support and demand here. The market has already started rejecting the level to the upside. So there is definitely the possibility of seeing even more rejection to the upside being created away from this level, because inside of a confluence of support zone like we have here, there is an increased probability of seeing institutional longing. And we will be speaking about institutional longing in just a few minutes when we move to the commitment of traders analysis. But for now, let's keep this in mind and drop down on the weekly time frame. Now, from a weekly standpoint, the situation is quite clear. We just had a massive impulse to the upside, and the market is currently facing a quite important resistance zone. This area was acting as previous resistance starting from here with this massive move to the downside, again respected as resistance here with this move to the downside, and currently the market is testing the same zone. However, it is testing it with quite strong bullish momentum. So this is the area that the market needs to break to the upside if it wants to continue creating the push to the upside that it is likely to create from a monthly standpoint, considering that it is rejecting that monthly support. So in my opinion, this is the zone that the market needs to break in order to continue higher from a weekly standpoint here on EURUSD. Now, if we drop down on the daily time frame, what we can notice is that from a daily standpoint, the structure is already broken to the upside. The market has shifted from a bearish trend, so bearish market with bearish structure. Therefore, this means essentially from creating lower lows and lower highs to now creating higher highs and higher lows. So the definition of an uptrend. The definition of an uptrend is the creation of higher highs and higher lows. Now the market has just created a new higher high, so higher than the previous one. The next logical step, since the higher low was here, is to create even another higher low and then go for the creation of a new higher high. That is the textbook uptrend. So from a daily standpoint, everything already seems quite bullish. I also spoke about EURUSD just a few days ago when the market was around this area and explained all the reasons for which we could expect this rejection to the upside, which is in fact exactly what the market just gave us. And by the way, I will link in the description that previous analysis so you can go and check it out for more free education. However, at the moment, from a daily standpoint, as we were saying, we have quite important structure. But before we dig deeper into what we have from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders. So what hedge funds and the big players in the market are doing precisely on EURUSD. Now, the first important thing we have to notice is that if we're looking at the data for the euro, we're actually already looking at EURUSD because all currencies on the spot are traded against the USD. And what we can see here is that with the last reports, net positions have been massively increased. We went from having minus 9.5k net positions up to having plus 24.7k net positions. So we had a massive increase of the net positioning with an extra 14,000 longs added with the last report and 7k shorts getting closed. So clearly institutions are moving aggressively back to the bullish side for EURUSD. So they expect as well that rejection to the upside away from that monthly support, considering how aggressively they're now shifting back to the bullish side for EURUSD. Currently, we're sitting with 179k longs compared to 155k shorts. So we just had a shift from having more shorts than longs, so now having more longs than shorts from an institutional perspective on EURUSD. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now back to the analysis. Well, from a daily standpoint, at the moment, this area is currently quite strong structure. It was the previous resistance from which all these moves to the downside were created. Currently still acting as resistance here. Now the market has broken it to the upside, so it is currently acting as support here. We can also notice that from a pattern standpoint, we have a clear impulse followed by a correction. So if we want to measure the correction, we have to take our Fibonacci from the low to the high, giving us a range in between the 0.32 and 0.786 retracements, which is a confluence of support area. Because if we have multiple layers of support lining up in the same area of price, that is a confluence of support zone, meaning that we have increased probability of getting institutional longing inside of that area. And if you have institutional longing, that increases the probability even more of having a potential rejection to the upside away from the zone. So in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire all-inclusive mentorship program. This is the most complete all-inclusive mentorship program. You will see here a complete presentation of everything included, which is essentially all my courses, including the programming course on automated algorithmic trading. You also have the possibility to gain access to one-on-one private mentoring, all included in the mentorship program, the trading station software with the Telegram signals notification, and also the COT data software, which is essentially the one that we just used in this analysis. So everything all for lifetime access. And if you continue to scroll down, you will see that you will have the possibility after the testimonials to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest at least to go and check it out at transparentfxtrading.com. You find the link also in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.